This is Nightly Business Report with Tyler Matheson and Sue Herrera. Funded in part by HSS.
Our value principles are patient first, and we want to deliver the highest quality care.
The goal of creating and sustaining value is all about putting the patient at the center of the equation.
The purpose of this organization is to help people get back to what they need and love to do.
Shifting gears, the president-elect was not at the Detroit Auto Show, but this year he had the biggest presence.
Patience, my dear. Wall Street is eager for a package of business-friendly policies, but how long will investors be able to wait for them to take effect?
A growing problem. What happens when farmers don't have enough workers to harvest their crops? It's something many are trying to figure out. Those stories and more tonight on Nightly Business Report for Monday, January 9th.
Good evening, everyone, and welcome. The auto industry may be coming off a record year for sales, but few expect a really smooth ride ahead. President-elect Donald Trump has been roiling the sector with tweets about production in Mexico and threats of a big border tax on vehicles made abroad. Fiat Chrysler today trumpeted $1 billion of investment in U.S. manufacturing. It drew praise from Mr. Trump, although the automaker insists the move is part of an already established business strategy. Ford, as we reported last week, canceled plans to build a new plant south of the border, but General Motors CEO says she's not changing a thing and that her company's small car production will stay right where it is, in Mexico. As Phil LeBeau reports, it's the back and forth with Mr. Trump that has overshadowed the usual glitz of the Detroit Auto Show.
Beyond the bright lights and big productions introducing new models, the biggest presence at the Detroit Auto Show is President-elect Donald Trump. He's not visiting the show, but he's on the mind of everybody here who realize Trump wants more auto jobs created in the U.S., not overseas. So Fiat Chrysler has announced plans to hire 2,000 more workers as it expands Jeep production in Michigan and Ohio. President-elect Trump tweeted about the decision, saying, "It's finally happening." Fiat Chrysler just announced plans to invest $1 billion in Michigan and Ohio plants, adding 2,000 jobs.
The timing may have coincided with this incredible emphasis that Trump is making on sort of American-made products and American production. But I think the substance of the announcement was inside the House for months.
Jeep's move comes a week after Ford scrapped plans to add a plant in Mexico in favor of expanding a current one in Michigan, where it now says it will build a new version of the Bronco SUV.
There's a lot of love out there. Go on lots of websites on Bronco advocates, and we're bringing that vehicle back in 2020.
GM CEO Mary Barra says her company has no plans to change where it builds vehicles, which includes Mexico. In fact, GM and Fiat Chrysler are among the biggest importers from south of the border. The question is how quickly those numbers could change if the president-elect succeeds in getting a border tax on Mexican-made autos.
I think the next few months are going to be very interesting and certainly going to be difficult for the industry, depending on what the flavor of the day is.
For all the talk here about executives trying to figure out how they'll deal with President-elect Donald Trump, one thing has not changed in the auto industry: record high sales. As one executive put it, sales are great. What's not great is trying to figure out where we'll build those cars and trucks in the future. Phil LeBeau, Nightly Business Report, Detroit.
Meantime, at Trump Tower in New York City, the president-elect met with Alibaba's Jack Ma, who said he plans to create 1 million jobs in the U.S. by getting more small businesses to sell to China and other Asian countries on the Alibaba platform. The two talked to reporters, where Mr. Trump also commented on the upcoming confirmation hearings for his cabinet picks.
They're going great. Confirmation's going great.
Your nominee haven't started yet.
I think they'll all pass. I think every nomination will be, they're all at the highest level. Jack was even saying, they are at the absolute highest level. I think they're going to do very well.
And one day before those confirmation hearings begin, Senate Majority Leader Mitch McConnell met with the president-elect at Trump Tower to discuss strategy. And late today, there are new reports that Donald Trump's pick for Secretary of State, former ExxonMobil CEO Rex Tillerson, did business with Iran while that country was under U.S. sanctions. Eamon Javers is in Washington with more. So, Eamon, will Mr. Tillerson face the toughest grilling this week? There are a number of them scheduled.
Yeah, that's right, Sue. Tillerson has always been viewed as perhaps the most wobbly of the Trump appointees here going into the confirmation battle this week. We'll have to wait and see how the hearings go. But this news story that you just mentioned from USA Today this afternoon, reporting that ExxonMobil did business with Iran through a subsidiary that was based in Europe at a time when Tillerson was an executive at the company. That's going to be one that's going to attract a lot of attention here in Washington. Tillerson was already facing some skepticism from Republican lawmakers, including Senator John McCain, who sat down with Meet the Press over the weekend, along with Senator Lindsey Graham. He expressed to Chuck Todd, the anchor of that program, exactly why he was still skeptical of Tillerson even after he met with him. Here's what he said.
Mr. Tillerson's relationship with Putin personally and Russia has raised concerns with me. I met with him. I still have additional questions.
Did you alleviate any concerns with you?
Yes.
Was that good? You felt?
I think there's a couple of areas that I feel better.
So you hear McCain there saying he feels better in a couple of areas. He still has additional questions, Sue.
There are also picks for commerce, defense, housing, labor. That comes basically on Thursday. Some of these picks are controversial. What can we expect?
Well, absolutely. Wednesday and Thursday are going to be big days. And remember, on Wednesday, you're going to see a whole bunch of people up there. At the same time, Donald Trump has his press conference on Thursday. Wilbur Ross of Commerce, Rex Tillerson might have a second day. General James Mattis for Defense Secretary, Ben Carson at HUD. All of those folks will be up there on Thursday. So this is going to be a very big week, a sort of a make or break week here for the Trump cabinet in waiting.
There are reports late this afternoon that Mr. Trump's son-in-law will take a White House role. What about potential conflicts of interest on his part and also his wife Ivanka's part? What do we know at this point?
Well, we're learning a couple of things about Jared Kushner's role in the future Trump administration. We are told that he will be serving as a senior advisor in the Trump White House, and that Trump officials are confident that they can get around the anti-nepotism provisions because the White House itself is not subject to them, they argue. They're also saying that Jared Kushner will divest substantial assets and that he'll resign his position at the Kushner companies and also at the New York Observer. So it's clear that Jared Kushner is going to make a big pitch to be a big part of the Trump administration. Not so clear about his wife, Ivanka Trump, Donald Trump's daughter. We're being told this afternoon that she is not expected to take a role anytime soon in the Trump administration, at least formally. But of course, we know that she is a very valued advisor to the incoming president-elect.
Indeed. Eamon, thank you very much. Eamon Javers in Washington.
The drug industry also preparing for a Donald Trump administration. The president-elect has said in the past that he wants to bring drug prices down. And after a rocky 2016 and lots of uncertainty heading into this new year, the $5 billion pharmaceutical deal announced this morning helped boost some optimism. And that deal comes at the start of the biggest industry event of the year. Meg Terrell reports from the J.P. Morgan Healthcare Conference in San Francisco.
More than 9,000 investors, analysts, and company executives braved storms to get to the J.P. Morgan Healthcare Conference in San Francisco this week. And they were greeted Monday morning by news of a deal. Japanese pharmaceutical company Takeda is paying about $5 billion to acquire Massachusetts biotech Ariad Pharmaceuticals. That's a 75% premium to Ariad's closing price last week.
We are very disciplined. So discipline means that we are not shy to walk away when the price doesn't fit what the value that we see. So we looked at the potential of Iclusig, we looked at the potential of Brigatinib, the pipeline, the platform, and we feel that this is a fair price.
The news buoyed investors' hopes for a brighter 2017. They also cheered an announcement from cancer drug developer Incyte on a collaboration with Merck in immunotherapy, an important new way of treating cancer using the immune system.
We're very excited about Keytruda, which we believe is foundational in the treatment of a lot of different tumor types. And so we're very pleased with having a first-line claim for people with non-small cell lung cancer. We're also interested, though, in getting the right drug to the right patient, and that involves different kinds of combination studies. And so the work that we're doing with Insight allows us to look at that particular combination and to figure out which percentage of patients might benefit from a combination over and above monotherapy.
But the industry has been under siege for the pricing of its drugs, and President-elect Donald Trump has embraced the issue, telling Time magazine he'll bring drug prices down.
We'll engage with the new administration, as we would any new administration, and Chairman Price, who's the new HHS incoming secretary, knows a lot about health care, to try to solve the problem, which is how do we make medicines as affordable for patients as we can and more balanced with the rest of the health care services and products people consume.
And of course, a risk for all industries, the threat of a Trump tweet.
The president-elect goes straight to the American people by tweeting, and at least for me, it's a normal condition now. This is the new reality, the new norm of bypassing a lot of filtered media and going straight to the American people.
Though the impact of the new administration leaves many open questions for 2017, investors by and large are optimistic about new progress in treating disease. For Nightly Business Report, I'm Meg Terrell in San Francisco.
On Wall Street, it was a record day for the NASDAQ, helped by the biotech deal between Arian and Takeda that Meg just mentioned. But the Dow retreated further from 20,000 as energy shares and utility stocks fell. The Dow Jones Industrial Average fell 76 points to 19,887. The NASDAQ rose 10 and the S&P 500 dropped 8. Stocks have rallied since Election Day on the idea of potential tax cuts, infrastructure spending, and a decrease in regulation. But how long will investors have to wait to see these policies put in place? Mike Santoli takes a look.
Wall Street is eager for a package of business-friendly tax cuts promised by the incoming Trump administration. But will the markets have the patience to wait for these policies to arrive, perhaps only after a tortured trip through Congress? While some swift action relaxing government regulations and undoing parts of Obamacare appear likely soon after Trump's inauguration, policy analysts say corporate tax reform measures might not come to a vote until the back half of 2017. This could disappoint those investors who've bet on stocks based on what a Republican-controlled Washington might do on taxes. The good news, though, the market seems not to be placing all its eggs in the policy basket just now. The so-called Trump trade, favoring industries that would gain from lower domestic taxes and new infrastructure spending, peaked about a month ago. Manufacturing and bank stocks have lagged the broad market since mid-December after sharp rallies in the 4 weeks following Election Day. And shares of companies with high tax rates, thought to be major beneficiaries of tax reform, have likewise trailed the S&P 500 the past several weeks. This suggests the index's recent levitation to record highs has been more about an expected rebound in corporate profits and a pickup in economic indicators globally. Earnings are projected to grow by some 12% in 2017, with the strongest results in the second half. While such estimates tend to be whittled down a bit as the year goes on, it's probably a plus that most analysts have not boosted their forecast yet by adding any benefits of possible tax changes. Whether the market's 6% gain since the election has already priced in much of this earnings recovery is a key question as the bull market approaches its 8th anniversary. A stock market that trades on corporate fundamentals is perhaps healthier than one dependent on policy help from Washington that might or might not arrive in the desired form. But it does raise the stakes for the earnings season that's about to get underway in the coming days. For Nightly Business Report, I'm Mike Santoli at the New York Stock Exchange.
And here to talk more about the markets is Michael Farr. He's president of Farr, Miller in Washington. Mr. President, welcome. Happy New Year.
I like hearing Mr. President in Washington, but I'm not sure I still have the right hair for it.
Let's talk a little bit about what Mike Santoli just mentioned, and that was earnings that are going to start coming fast and furious roughly at the time of the inauguration. Do you think they are going to, this year, be strong enough to support stock prices where they are?
Probably not on that 12 to 13% growth range that Mike talked about. I thought that was an excellent report. I mean, everybody should have listened to what Mike Santoli just said, which is that the market's priced in a very rosy scenario, and we still need to see if it's going to deliver. Out of the blocks, we're going to be looking at bank earnings. We're going to be looking to see if the changes in the dollar. We saw a dollar spike and really went up a whole lot after the election. It went up significantly, and when it does that, it trims off of of GDP, but it also can trim off of some of the profit margins of some of the multinationals. So there are some headwinds in place, and market's been looking for all of the good things that are going to come tomorrow and ignoring some of the tough things today.
Yeah, and you argue that stocks are not inexpensive at these levels.
I mean, we're flirting with Dow 20,000 and record levels today on the NASDAQ and record levels here and record levels there. And so when you're at all-time highs, you're not low. And if the old rule is to buy low and sell high, certainly you have to be careful. And I think this is really no point where you start reaching for extra yield in a rising rate environment, and you don't go out into the thin branches for trying to get extra returns on your equity shares. This is a time to play it a little more safe until you see the whites of their eyes.
One of the areas that you do like is healthcare. Why?
I do. Well, if you listen to the early reports and the scrutiny under which these pharmaceuticals are coming, and the J.P. Morgan conference, another great report on the Nightly Business Report tonight. You got to watch Nightly Business Report. You're learning a lot. So we're seeing that this is really under pressure. We're seeing the drug companies are under pressure. Right after the election, we saw a lot of the companies that could be negatively affected by a reform of the Affordable Care Act really started to drop. I think maybe they've overdone it. I think that there's some real value there. These are typically not economically sensitive stocks. They still benefit from that huge area of the demographic of the aging population. So you look for things that look to be reasonable values. I look for some of the medical device companies I still think are very attractive and probably a much safer place, solid balance sheets, good dividends to put some money to work.
All right, Michael, thanks very much. Michael Farr with Farr, Miller, and Washington.
And still ahead, the surprise move from the government that could lower costs for some mortgage borrowers.
Online shoppers helped overall holiday sales. A new comprehensive report from First Data shows that overall consumer spending grew more than 4.5% over the previous year. Online retail purchases were up 12%. The data tracked payments for nearly 1 million merchants between late October and early January.
To real estate now, where future borrowers are about to get a break on their monthly mortgage payments. A parting gift to the housing market from the Obama administration, which may or may not be returned by the incoming White House. Diana Olick has more.
The Federal Housing Administration, the government insurer of low down payment home loans, is reducing its annual mortgage insurance premium by 25 basis points, which it says will save FHA borrowers an average $500 this year. It expects 1 million Americans to use FHA loans this year, either to buy a home or to refinance a home loan. The FHA's insurance fund was a major player in the housing bailout, offering borrowers the only low down payment option available, but it came at a cost to FHA. The insurance fund fell into the red, requiring a bailout of $1.7 billion in government funds itself. It has since gained $44 billion in value since 2012 and has been above its capital requirements for 2 years. HUD Secretary Julian Castro said this is a fiscally responsible measure to price our mortgage insurance in a way that protects our insurance fund while preserving the dream of home ownership for credit-qualified borrowers. He added he does not expect the Trump administration will scale it back, but Republicans quickly fired back. Representative Jeb Hensarling, chairman of the House Financial Services Committee, which oversees the FHA, said playing politics with the FHA through cynical, surprise 11th-hour rule changes is irresponsible and endangers the integrity and success of the FHA. President-elect Trump's nominee for HUD Secretary Ben Carson will be on the Hill for hearings Thursday. For Nightly Business Report, I'm Diana Olick in Washington.
Blackstone reportedly doesn't want a piece of Energy Transfer Partners anymore, and that is where we begin tonight's market focus. Several reports say the private equity firm has ended talks with the natural gas pipeline operator about a stake worth $5 billion. Last month, the Wall Street Journal reported the two companies were in talks about a potential deal. Blackstone shares off a fraction, 30.47 the close, but Energy Transfer was off about 2.5% at 36.53. Merrimack Pharmaceuticals will sell some of its cancer treatments to the French drug maker Ipsen in a deal worth up to $1 billion. Merrimack also said it's cutting its workforce by 80%. Shares rose almost 2% to $3.67. And United Health Group said one of its subsidiaries will buy the ambulatory services chain Surgical Care Affiliates for more than $2 billion. As part of the deal, United Health will add more than 200 outpatient facilities and about 3,000 physicians to its unit. United Health Group fell a fraction to $161.95, while shares of Surgical Care Affiliates soared 16% to $56.65.
The food giant Mars said it would strengthen its pet care division by taking over animal hospital operator VCA for nearly $8 billion. The owner of IAMS and Whiskas brands already owns pet hospitals, but will acquire hundreds more in this deal. VCA shares surged 28% to $90.79. Goldman Sachs is turning bearish on Procter & Gamble and Coca-Cola. The bank lowered its rating on Procter & Gamble from neutral to sell, citing valuation concerns and the expectation that the conglomerate will post disappointing quarterly sales. Coke also was given a sell rating due to currency headwinds and the belief that it might miss expectations this year. P&G shares were off a fraction to $84.40. Shares of Coke fell 1% to $41.32. And lighting systems maker Acuity reported disappointing earnings due to lower demand and warned that weakness could linger in the current quarter. The company cited a rise in manufacturing costs for the poor results. The shares were punished. They fell more than 14% to $202.51.
And coming up, what's prompting farmers to do something many have never done before? America's labor market is as tight as ever. U.S. businesses have added millions of jobs since the Great Recession, but there's one industry that is experiencing a labor shortage: agriculture. And now some farmers are worried that Donald Trump's immigration policies could make the problem even worse. Aditi Roy reports from Gilroy, California.
This here is 70 acres.
Pete Aiello and his dad have been farming for 40 years on their 5,000-acre operation based in Northern California. But lately, they've had a growing problem.
We're leaving some crop behind. We're not able to keep up with harvest.
The Aiellos don't have enough workers to harvest their crops. They're not alone. Across the country, farmers are facing a labor shortage that some are calling a crisis.
Of course, it's a financial burden. You have to make difficult decisions sometimes as far as having 2 fields to harvest, but only being able to harvest one of them.
Partnership for a New American Economy, a bipartisan immigration reform group, reports between 2002 and 2014, the number of full-time agricultural workers has dropped by 146,000 people, resulting in a loss of about $3 billion in crop production. And the American Farm Bureau Federation has come out with videos showing farmers forced to destroy crops or let them rot in the fields because they simply don't have enough workers to pick them.
Last year I had to do something I'd never done before: destroy 10 acres of good squash.
And now some farmers are worried the problem will get even worse if Donald Trump makes good on his campaign promise to deport undocumented workers.
We are going to triple the number of ICE deportation officers.
More than half of the country's agricultural workers are undocumented, according to the USDA. The American Farm Bureau estimates an immigration policy that focuses solely on enforcement could cost the country $60 billion in agricultural production.
We are at the point in the industry that we're either importing our labor or we're importing our food. And farmers and ranchers across America want to provide this locally grown fruits and vegetables to our consumers, but we have to have access to a legal and stable workforce to get that done.
Pete Aiello calls the current immigration system broken. He says he's watching and waiting to see if Trump can fix it.
We need to come up with a system that works first and then secure borders.
On the solutions side, the American Farm Bureau says the current temporary guest worker program, the H-2A visa program, is full of bureaucratic challenges and delays. The group believes any effective immigration policy needs to reform that system. For Nightly Business Report, I'm Aditi Roy, Gilroy, California.
Children don't come cheap. A new report out today shows that raising a child could cost you nearly $250,000. And according to the Department of Agriculture, that number does not include college. Housing is the biggest expense, followed by food, and childcare is also right up there. And as children age, so does the amount spent on transportation, food, health care, and clothing.
They do eat more as
Yes,
they get
they
older.
do.
And finally tonight, it was 10 years ago today that Steve Jobs unveiled the first iPhone. In his trademark black turtleneck, Jobs called the iPhone a revolutionary product. Boy, did he know that. The original iPhone had 4 to 8 gigabytes of storage, and Apple was valued as a stock at about $75 billion. The latest version has 256 gigs of storage, and Apple is worth about $630 billion, the most valuable company in the world.
It really did revolutionize.
A product that changed the world.
Absolutely. Changed my life, certainly.
Yeah, a computer in your pocket.
That's it. All right, that does it for Nightly Business Report tonight. I'm Sue Herrera. Thanks so much for watching.
And thanks from me as well. Have a great evening, everybody. We'll see you back here tomorrow.
Nightly Business Report has been funded in part by HSS.
Our value principles are patient first, and we want to deliver the highest quality care.
The goal of creating and sustaining value is all about putting the patient at the center of the equation.
The purpose of this organization is to help people get back to what they need and love to do